Hi, I'm Martin Pring. They say that a picture is worth 1,000 words, but I say that a chart is worth 1,000 pictures. And that's because charts in the financial markets often scream out very important messages that an important or significant trend reversal has taken place or is about to take place. Each month I publish a newsletter called the Intermarket Review, and each issue contains what I call the chart of the month. And that features a market that I think has just turned or is about to turn. So this series of videos aims at presenting these charts of the month. So if you're interested in them, please hit the subscribe button and you'll be brought up to speed on a regular basis. So without more ado, let's go to the chart room and see what's in store for this month. The last few months, investors have been fed a diet of troubles in Europe and a slowing global economy. In effect, a deflationary diet. Our chart of the month this month suggests that it will probably be more profitable for investors to look in the opposite inflationary direction. Here we see the ultimate inflation-deflation relationship, the ratio between commodities in the form of the Dow Jones UBS Commodity ETN and bonds, represented by the iShares Lehman 20-Year Trust, the TLT. A rising ratio indicates that commodities are outperforming bonds and is therefore inflationary, and vice versa. At first glance, it may look as if this support trend line will be violated, leading to a deflationary outcome. However, when we look at the smooth momentum, a different picture emerges. First, the long-term momentum continues to rise and is bullishly above its red dashed moving average. The intermediate series has just turned to the upside, and the very short-term indicator has violated this downtrend line, a very positive sign. That suggests that this green downtrend line might be penetrated on the upside. If that happens, it will trigger two additional technical events. First, a move above the 65-week exponential moving average, that's the dashed red line, and the start of a series of rising peaks and troughs. Such action would, in my opinion, suggest that the ratio is headed significantly higher. And that's obviously got some inflationary implications. The ratio is calculated by dividing the Friday close of the DJP by that of the TLT, and the magic number is 0.414. With that in mind, let's quickly look at the two components. Here's the TLT. I'll place some overbought and oversold lines on the chart, and these green arrows show that when the momentum series bottoms out from around the oversold level, nice rallies have been generated. Now, if I turn the tables around, the solid arrows show successful sell signals, and the two dashed arrows, the failures. Right now, the oscillator is stabilizing and is at a very overstretched level, and that suggests a reversal may not be far away. Here's the DJP, and note that the intermediate KST has just gone bullish. But what we really need to see is the completion of this base as confirmation with a Friday close above $41.15. So there you have it, the original commodity bond ratio close to an inflationary signal, and the two components not quite confirming but certainly sympathetic with such a development. Personally, I think we're going to get an inflationary breakout at exactly the time most investors are positioned for deflation. Enjoyed this chart of the month, you may want to go to Pring.com and download a free sample of our Intermarket Review, a monthly roundup of the world's principal financial markets with a special emphasis on the US. We also look at global indicators, bonds, precious metals, currencies and international markets using ETFs to execute our strategies as much as possible. You'll find unique indicators and intermarket relationships you cannot find anywhere else. In the meantime, thanks for watching and good luck and good charting.